Greetings, members, one and all of the Salivation Nation. Gold and silver take a step back to rest. Let's explore. This happens from time to time. We see the markets take a move in positive territory, and then they kind of just ease back a little bit. They consolidate, a little bit of a correction, an expected correction. And I think that's what we're seeing here with gold and silver in this case. They are moving back a little bit, but most of us think that the prices are going to go up maybe before the end of the year, although there has been some times when we saw the prices go down, many people were thinking we may see $20 silver again and maybe even gold below $1,600. But nonetheless, that has not happened, and we're seeing some movement here in the other direction here. Gold and silver see routine downside corrections and existing price uptrends. Now, this is one day of this, essentially. What will happen tomorrow is another one's guess, but it looks like, according to this, at least from the title, that we may see this as just a temporary setback, and we may see the prices stabilize for a while before another move to the upside. Jim Wyckoff in this article here from Kitco says that gold and silver prices are lower at midday Tuesday on some normal backing and filling on the charts following recent gains. Both metals bulls remain comfortable at present, as near-term price uptrends are in place, and the overall path of at least resistance is sideways to higher. And I think that's probably a fairly good assessment as where we stand. December gold futures were last down $14.40 at $17.9240. December COMEX silver was last down to about 48 cents to $24.11 an ounce. Now, if those futures play out to be to fruition, well, that blows away my theory and my prediction of $30 silver before the end of the year. U.S. stock indexes are firm at midday, with the S&P 500 stock index hitting another record high overnight. The keener risk appetite early this week is also a negative for the safe haven metals. Corporate earnings reports are front and center for stock market traders at present. Traders and investors are fickle. We know that. We know that psychology plays a huge role in the markets. That's why no one can really predict what's going to happen from day to day or week to week. This week focus is on positive corporate earnings data that is pushing the stock indexes higher. Next week, inflation concerns that include rapidly rising energy costs and global shipping constrictions may have the marketplace in a more somber mood. And these things are not going away. In fact, it's been stated by administration officials that we are going to see supply chain issues through next year, the beginning part of next year. And more than likely we will still, and they are also saying that we will still see inflation around at that time. The key outside markets today see the U.S. dollar index higher, which is also negative for the metals. Crude oil prices are higher and trading around $85 a barrel. Don't be surprised if continually rising energy prices heading into the northern hemisphere in winter start to bite at trader and investor sentiment. Meanwhile, the 10-year U.S. Treasury note yield is presently fetching 1.64%. For perspective, the yield on a 10-year German Bund is presently negative 0.107%, and the UK 10-year gilt is at 1.147. So that means that our Treasury yield here in the United States is strong compared to others, and that's just it. Our dollar really is weak by any measure, but compared to everything else, it's strong. That's why they call the strength of dollar DXY, the dollar index, as compared to breadbasket of about 6 other currencies that the IMF measures. Technically, December gold future bulls still have the overall near-term technical advantage amid a 4-week-old price uptrend in place on the daily bar chart. Bulls' next upside price objective is to produce a close above solid resistance at the September high of $1,836.90. The bear's near-term technical or downside price objective is pushing futures prices below solid technical support at $1,750. First resistance is seen at $1,800, and then at this week's high of $1,811.50. First support is seen at today's low of $1,783, and then at $1,775, with a Wyckoff's market rating of 6.0. December silver futures bulls still have the overall near-term technical advantage. Prices are in a 4-week-old uptrend at the daily chart. Silver bulls' next upside price objective is closing prices above solid technical resistance at $25 an ounce. The next downside price objective for the bears is closing prices below solid support at $23. Wasn't that long ago we were below $23, and now we see solid support at $23. So that should encourage silver stackers out there, although I know many of you are very discouraged that silver has not moved much higher. We've talked about some of the reasons why in prior videos. First resistance is seen at this week's high of $24.69.5, and then at the September high of $24.94. So we almost got to $25 in September. Didn't quite make it though. Next support is seen at today's low at $23.92, and then at $23.61. It has a market rating of 6.0 from Wyckoff. December New York copper, I'm talking about copper now, is down 490 points at $447.85 today. I don't know what that's measuring, how many pounds that is, but that's 447.85 cents. So in other words, $4.47 a pound. Prices closed near the session low today. The copper bulls have the overall near-term technical advantage, but have faded recently. Prices are still in a 4-week-old uptrend in the daily bar chart, but now just barely. Copper bulls' next upside price objective is pushing the closing prices above solid technical resistance at its October high of 482 cents. That's $4.82. So there we go, and there's more talking about the resistance at this week's high of $4.56, and then at 460 cents. Now, copper is up to levels we haven't seen in quite a while, and it's been consistently up. And silver is a lot to go for. The reason why I'm mentioning copper is I bought a piece of copper today at my LCS. Obviously, I paid a lot more for it, but it was just a cool looking little bar. Might get a few more of those just for fun. But when you buy copper, you are really losing money because it's not something you're going to gain back, probably not even within your lifetime, unless there's just massive hyperinflation. Price of these commodities go sky high, but the cost to produce a 1-ounce copper bar is just far exceeds the value of the metal that is contained inside of it. So your best bet for accumulating copper is pre-82 cents. And some that were minted in 1982, the heavier of the versions that are also minted that contain zinc, those are the ones to buy or to hold on to. And they're worth, about double face value. So there you have it. Interesting times indeed. The markets are moving slightly downwards today. We shall see what happens as we continue to press on. Gold and silver, two very amazing metals, frustrating metals for many of us as well. But that's part of what it means to be an accumulator of these metals, a stacker, if you will, is we stack and hold. We don't stack and sell. And we don't buy it to sell, at least not on a whim, although I can understand and sympathize with those who want to sell if they make a good gain on the metal. But also, if you need to sell, in the case of emergency situation, which does occur, that's the time that you liquidate. But at times, if you need to sell it, you have to be prepared to take a loss, which is why, to minimize that risk, it is always good to buy it in a smart way. Smart dollar cost averaging. I've talked about that in prior videos. Nonetheless, there's your metals market news for the day. I do post news about where the prices are And I know people say, well, it doesn't matter, I'm stacking for the long term, but it is interesting to see what drives the price of gold and silver. And we're seeing what happened today and what has driven the price today. And a lot of different things can happen that can move these markets. So there you have it. Post your thoughts in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.